Well, we think the bar for hikes is pretty high. Coming into the year, we thought the Fed would probably cut rates 1 or 2 times, mainly based on they'd probably push it out a little bit until we saw more confirmation that inflation was coming down. We've shifted that view a little bit. We like giving ranges. We don't like precise forecasts. So 0 to 1 is how we're framing it right now. But I think the bar for hikes is just really high right now. What I'm worried about is the downside to the economy if this conflict goes on longer. Right now, the markets are really only paying attention to inflation. And even when you go back to last week's meeting and the questions that were asked of Fed Chair Powell, a lot of it was on the inflationary front and not what happens down the road given the huge spike in the price of oil.
I mean, I looked at a blended portfolio, a bond portfolio, and it's down 2.7-ish% from the nirvana before this upset. Forward, is it a total return environment, or is it just please get out of the way, clip a coupon, and say thank you? Which is it?
I think it's clip the coupon right now because there's too much uncertainty right now for us to take a directional bet with individual investors. So intermediate term, clip the coupon. If you go too long right now, if you see a 4.25, 4.5, 10-year, maybe that might look attractive to someone, but we're worried that it could rise a little bit further. And even just a small increase when you have a long-term bond, it's a bad experience for a lot of investors.
So what do you do with ETFs?
You hold for the long run. And you understand what comes with that.
Within an ETF?
We're not extending duration just yet.
Paul taught me how to. I have no idea what I just said. Paul taught me how to do that.
So what is the key call right here to your clients? 30 seconds left here. What's the key message getting across here?
Key message is don't panic too much. We don't want anyone to take drastic and make drastic moves when so much of this is driven, as you two alluded to, on posts and truths as opposed to economic fundamentals. We want to get some clarity first about the potential end of the war. So given that, a slightly more defensive posture. We're not saying you can't take any risk, but we're not looking to overweight risk right now.
So to cut to the chase, do you and Kevin Gordon have to be in separate buildings? I mean, is that the way it rolls at Schwab?
No, we're all good. He's a busy man. He's here with you all the time, Tom. I can't keep track of him. He's in the studio every other week.
I know. His agent is just,